Locums can be a tax goldmine or a headache, depending on how you track it. I'm Jeff Green, CPA and founder of MedTax, where we work exclusively with doctors and save them thousands with proactive tax planning. Today, I'll help you keep more from your extra shifts by setting up your 1099 income correctly, claiming what's deductible, handling multi-state filings, timing your estimates, and quoting work net of tax. Let's start with structure. Most clinicians begin as a sole proprietor. It's simple. You use your social security number or an EIN, send in a W-9, and you're in business. When profits grow and stabilize, you should consider converting to an S-Corp. The potential upside is savings on your self-employment taxes, but it comes with payroll, reasonable compensation, and tighter bookkeeping requirements. If the administrative lift outweighs the benefit, stay a sole proprietor and keep things lean. Next is deductions. There's travel, lodging, per diem, and mileage. Your tax home is the center of your regular work. Travel away from that tax home for temporary assignments can be deductible. Commuting to a regular nearby site is generally not. Keep a mileage log, save lodging receipts, and choose either per diem or actual meal costs. Never both for the same day. If a facility reimburses you, that usually reduces the deduction. Licenses, CME, professional dues, scrubs, and malpractice premiums tied to your locums work are typically deductible as ordinary and necessary expenses. For multi-state returns, if you physically worked in a state, that state may want a non-resident return even if no tax was withheld. Your resident state generally taxes everything, but gives you a credit for taxes paid elsewhere. Now, this varies by states. That credit isn't always dollar for dollar, so two equal pay shifts in two different states can net you different after-tax results. Keep a simple tracker: state, dates work, gross pay, withholding, and reimbursed expenses. Quarterly estimates. If your W-2 doesn't withhold for locums income, plan for payments. Build a monthly routine. Close your books, review year-to-date profit, and adjust the next estimate. Many clinicians set aside a target percentage of net profit into a separate tax sub-account every time money hits the business account. That separation keeps cash ready and prevents any April tax anxiety. Bookkeeping that survives an audit is straightforward. You open one checking account and one credit card for the locums business only. Deposit all 1099 income in there. Categorize expenses monthly. Attach receipts digitally. Note the business purpose on each receipt or in your app. If you elect S-Corp status, run payroll on schedule and document how you set reasonable compensation. Consistent, boring habits win audits. Let's ground this with a brief case study. Dr. Lee is an emergency physician with a full-time W-2 job who adds weekend locums in 2 states. She started as a sole proprietor and opened a dedicated bank account. Every deposit and expense flowed through that account. She logged travel days away from her tax home, saved lodging receipts, and used her per diem for meals. A spreadsheet listed each state's work, pay, and withholding. After 2 quarters of consistent profit, she considered converting to an S-Corp with her CPA. The math justified it, so she switched, set a reasonable salary, and kept her monthly close routine. The result: predictable estimates, clean records, and a higher actual take-home because nothing was left to memory. If you want a one-page checklist that mirrors this process, I made one to catch you up to speed. Download the Locums and Moonlighting tax deductions cheat sheet from the link in the description below. Now, to pricing net of tax. Start with what you want to keep after tax unreimbursed costs. Suppose your target net for a weekend is $2,000. If your combined tax rate on that income is roughly 30% and you expect $200 of unreimbursed expenses, solve for the quote that leaves $2,000 after those items. That approach keeps your pay predictable and filters out offers that look good on paper but don't meet your goals. Here's a quick recap of everything we went over today. Pick a structure that matches your profit and appetite for admin. Claim deductions that truly stem from temporary work away from your tax home. File non-resident tax returns where you worked and capture resident state credits. Run a monthly close and estimate rhythm, and quote shifts from a net first mindset. For a printable version you can keep next to your scheduler, I put the key steps and a mini calculator on one page. download the Locums and Moonlighting tax deductions cheat sheet from the link in the description below. Thanks for watching. If you're a busy healthcare professional who wants proactive tax planning, schedule a discovery call with MedTax today using the link in the description. I'm Jeff Green, and I'll see you at the next one.